Hey there and welcome back to InvestMaster. If you're new here, make sure to hit that subscribe button and ring the bell so you won't miss out on any of our finance and investment tips. In today's video, we're going to discuss the top 8 investment strategies for beginners. Whether you're looking to build long-term wealth or just starting to explore the world of investing, these strategies will give you a solid foundation to build on. Let's dive right in. When you're just starting out in the investment world, one of the safest and simplest strategies is to invest in index funds. These are funds that track a specific market index, such as the S&P 500. What's great about index funds is that they offer diversification, which means your money is spread across multiple stocks, lowering the risk. Plus, they tend to have lower fees than actively managed funds. Index funds allow you to invest in the entire market without having to pick individual stocks. For example, when you buy an S&P 500 index fund, you're indirectly investing in the 500 largest companies in the U.S., which are leaders in various industries. For beginners, this is a low-risk, low-effort way to build wealth over time. Dollar cost averaging (DCA) is an investment strategy that involves investing a fixed amount of money at regular intervals, regardless of the market's performance. This means you buy more shares when prices are low and fewer shares when prices are high, helping to average out your cost over time. Why is this great for beginners? It eliminates the need for market timing, which is difficult even for experienced investors. DCA can help smooth out market volatility and reduce the emotional stress of trying to figure out when to buy or sell. Plus, it encourages consistent investing, which is key to long-term wealth building. Another strategy for beginners is investing in ETFs, or exchange-traded funds. Like index funds, ETFs offer diversification, but with one key difference. They are traded on the stock exchange just like individual stocks. This means they can be bought and sold throughout the day, giving you more flexibility than traditional index funds. ETFs come in many varieties, from those tracking specific sectors, like technology or healthcare, to those that focus on international markets or bonds. For a beginner, an all-market ETF or one that tracks the S&P 500 is a great choice. ETFs generally have low fees and can be a good way to get exposure to a broad range of investments without taking on too much risk. Dividend investing is a strategy where you focus on buying stocks that pay regular dividends. A dividend is a portion of a company's profit that's distributed to shareholders, usually on a quarterly basis. These dividends can be reinvested to purchase more shares or used as a source of passive income. For beginners, dividend investing can be attractive because it provides a steady stream of income, in addition to any potential stock price growth. Companies that pay dividends are often established, financially stable, and less volatile. For those looking for income in addition to capital gains, dividend stocks can be an excellent choice. If you're looking for an alternative to traditional stock market investments, real estate can be an excellent option. There are a few ways to invest in real estate, such as through real estate investment trusts, REITs, or by directly purchasing property. Real estate investment trusts are companies that own or finance real estate and offer a way to invest in property without having to buy physical buildings. They typically pay high dividends and are a relatively low-maintenance investment. On the other hand, direct real estate investments involve purchasing property to rent or sell. While it requires more capital and effort, it can provide steady income and long-term appreciation. When it comes to picking individual stocks, there are two primary strategies: growth investing and value investing. Growth investing focuses on companies that are expected to grow at an above-average rate compared to others in the market. These companies often reinvest their earnings into expansion rather than paying dividends. While growth stocks can offer high potential returns, they are also riskier and more volatile. Value investing involves finding undervalued stocks, those that are trading below their intrinsic value. Value investors look for companies that have strong fundamentals, but are temporarily out of favor in the market. This strategy is generally considered safer than growth investing, but it requires patience to wait for the market to realize the true value of the company. As a beginner, it's important to understand the differences between these two strategies and decide which aligns with your risk tolerance and financial goals. For those who prefer a more conservative approach, bonds and fixed income investments are worth considering. Bonds are essentially loans you give to companies or governments, and in return, they pay you interest over a fixed period. Bonds are generally less volatile than stocks and can provide a steady income stream. For beginners, government bonds or high-quality corporate bonds are safer bets. While bonds don't offer the same high returns as stocks, they can be a great way to balance risk in your investment portfolio and provide stability, especially in uncertain market conditions. Before you even think about diving into these investment strategies, it's important to first build an emergency fund. This fund should cover 3 to 6 months of living expenses and be kept in a safe, easily accessible account like a savings account or money market fund. Having an emergency fund gives you peace of mind, knowing that you're financially secure in case of unexpected expenses or emergencies. Additionally, always consider your risk tolerance. Different investment strategies come with varying levels of risk, and understanding your own comfort level with that risk is essential. It's important to assess your financial situation, goals, and time horizon before making any investment decisions. And that wraps up today's video on the top 8 investment strategies for beginners. Remember, the key to success in investing is starting early, being consistent, and staying informed. No matter which strategy you choose, always take the time to do your research and don't be afraid to ask for professional advice if you need it. If you found this video helpful, make sure to give it a thumbs up, leave a comment with your questions, and of course, subscribe to InvestMaster for more great content. Thanks for watching and happy investing.